Hi, thank you for joining this mini webinar. It's going to be really crisp and short to the point webinar. Before we get into the presentation, let me just take a couple of minutes to introduce myself. I am CA nrajca, Chartered Accountant by qualification, a teacher, trainer by passion. I started my career as a banker, credit analyst with State Bank of India. Worked for a period of 4 years. In very short period, I had the opportunity of becoming team leader, credit processing cell. So worked on 250 plus projects. It's 5,000 crore plus size. Then came out and started my CA practice. Had my practice for a period of 7.5 years. Alongside had this teaching training. Thanks to technology, today through online, I teach 2 lakh plus students all over the world, basically on banking, credit and financial analysis, and majority of them are working banking executives. I'm really glad that my courses are helping them, and I'm sure this course will be relevant and useful for you as well. Let's get into the webinar. And here we are going to follow the common sense or the logic behind preparing the financial statements and not the detailed rules. So let's look at some transactions and we'll see how the financial statements can be prepared. Just have a look. Company made a sales of rupees 100 crore. Making sales, is it an income or expense? Sales is an income, so this should appear on the income side of the profit and loss statement. So here we have expenses on the left, income on the right. Sales income should appear on the right side. So sales income, it's 100. Company paid salary of rupees 30 crores. So paying salary, is it an income or expense? Paying is an expense. So it should appear as expense in the statement of P&L as expense on the left hand side. Received other income of rupees 20 crores. So receiving income, the name itself says it's an income, so it should appear as income on the credit side, or on the right side say other income rupees 20 crore. Rupees 50 crores paid for material purchases for production. So you have purchased materials, and is it an expense or an income? Purchasing is an expense, so it should appear on the expense side, materials rupees 50. It's 50 crores. And company incurred 10 crores on selling expenses, 5 crore on admin expense, and 5 crores on interest to bank. All these are all expenses, right? So they all should appear on the expense side. It's highlighted in yellow and they are here. So now what is the profit? You have income of 120, expense of so much. Let's see. Look at the total income. It's 100 plus 20, so it's 120. What are the expenses? We have various expenses: material, wages, selling, admin, interest, fine. And the total of expenses 100 crores. So what is their profit now? Look at here, profit is 20 crore. That is income of 120, expense of 100, and profit is 20. And the total here is 120. So we have calculated the profit is 20 crores, and this is all about the income statement. We have recorded income on one side, expenses on the other side. We have found whether the company has made profit or loss. Now we'll just run through the balance sheet. Okay. In balance sheet, the liabilities and assets are recorded. So what is liability? Anything which has to be repaid is a liability. So understand, anything which should be repaid is a liability. And what is asset? What the organization owns, or what the organization has acquired out of the funds brought in from liabilities. So let us understand with an example. The company started with a capital of 100 crores. So capital is basically a borrowing from owners. As far as the business is concerned, the capital should also be repaid. So capital is a liability. So in the balance sheet, it will appear here on the liability side, capital, and what's the amount? It is 100. Next transaction, land and building purchased with the capital for 100 crores. So they have infused capital of 100, and with which land and building is purchased. And land and building, is it a liability? No, it is an asset, because the organization is going to own the land and building. So company will own the land and building, and it is an asset, and it will appear on the asset side of the balance sheet. Here we have on the yellow cell fixed assets, land, and what's the value? 100. So you have a capital of 100. With that capital, you have purchased land and building for 100 crore. Then the company had taken a loan from the bank, rupees 5 crores. So loan is something which have to be repaid as per schedule or at any point of time. So anything which should be repaid is a liability, and this should appear on the liability side, say loan 5 crore. Then amount due from customers, rupees 3 crore. This is the amount which the organization have to receive, or this is the amount the organization has right to receive, the ownership. Anything on which you have the right to receive or ownership is an asset. So this will come here in the balance sheet asset side as debtors. Anything which is due which you have to receive is a debtor, and it will appear here debtors 3 crore. Another example, supplier have given credit for purchase of materials 5 crore. So you have purchased goods worth 5 crore. Anyhow, you have to pay back this 5 crore. So you have to pay back, it is a liability. So it will appear on the liability side of the balance sheet as current liabilities, say 5 crore. And one more transaction, stocks purchased with credit extended by the suppliers 5 crore. So just now you have taken credit from suppliers for 5 crores, and with that 5 crore you are purchasing stocks. Purchasing stocks is an expense, but if you are going to have that stock unutilized, it is an asset. It is an asset, so it will appear on, I repeat, it will appear in the asset side of the balance sheet. Here the stock, it's going to be 5 crore. The next item is the company has a cash balance of rupees 2 crores. Cash is an asset because the organization is going to own that, so it will appear on the asset side of the balance sheet, cash rupees 2 crore. Now what we'll do, we'll total this. Look at the total on both sides. Here on the liability it's 110, and the asset total is also 110. So this is all about the balance sheet. We have recorded the liabilities on one side, assets on the other side. It can be vertical, it can be horizontal. But here, did you notice total on both sides same? Yes, total on both sides same. It's because of something called double entry concept. For every debit there is going to be credit, or put it in this way, for every action there is a reaction. So balance sheet will always tally. So this is all about balance sheet and income statement. Thank you.
Are you a bank executive looking to advance your career in credit or advance profile in SME and corporate banking? Do you want to learn the pre-sanctioned credit and financial analysis skills that are essential for success in this field? If so, then our course, Credit and Financial Analysis Mastery Bundle, for bankers, is for you. In this comprehensive and structured online course, you'll learn the pre-sanctioned credit underwriting process, covering credit analysis and financial analysis specific to SME and corporate banking credit. You'll be guided through each and every step of the process, from understanding the basics of credit analysis to assessing term loans as a banker. With 15 modules and a variety of ebooks and other resources, you'll have everything you need to master this highly sought-after skill. Our course is pre-recorded, so you can access it anytime, at your own pace, without disturbing your official working hours. Plus, you can access it as many times as you'd like and even download it to your mobile device for offline viewing. When you complete the course, you'll receive a certificate of completion. And with lifetime Q&A support through our Telegram group, you'll have access to the guidance and support you need to succeed. Don't miss this opportunity to advance your career in credit and financial analysis. Enroll in our course today and take the first step towards a successful banking career.